All right, welcome back to another episode of the Black Bullion Show. Now, every now and then, I mention hyperinflation on this channel. And I know some of you have been talking about silver and gold really shooting for the moon. Now, there's something that we need to touch on before we can even consider hyperinflation in the future. And that is the concept of the monetarist theory. Now, for those of you who haven't heard of the monetarist theory, stay tuned for more. I'll get into that shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so here's a quick synopsis of the monetarist theory. And it reads, the monetarist theory is an economic concept which contends that changes in money supply are the most significant determinants of the rate of economic growth and the behavior of the business cycle. The competing theory to the monetarist theory is Keynesian economics. When a monetarist theory works in practice, central banks, which control the levers of monetary policy, can exert much power over economic growth rates. Now, here are some key takeaways. According to the I'm just going to read this second bullet point here. It is governed by the MV equals PQ formula, in which M equals money supply, V equals velocity of money, P equals price of goods, and Q equals quantity of goods and services. Okay, so we have that under our belts, right? I know you guys have heard me mention MV equals PQ. Now, that all sounds well and good, as we see that money supply has picked up recently. However, because we've seen the money supply skyrocket to levels that are just astounding to see, why haven't we gotten that hyperinflation? Well, it's because of this. Velocity of currency. Now, you guys can find this graph on the Fed's economic research website. Just search, for velocity of M2 money stock. Now, notice that where we are right now in Q1 of 2020, we have velocity at 1.374. Now, that's the worst we've had it, given this time range that we have on this website. As you can see, it's the lowest point on this graph. And the peak of our velocity was roughly around Q3 of 1997, where we had 2.189. So now let's take a look at the M2 money supply. So this is the growth of the M2 money supply over time. Now here, going back to Q3 or the end of Q3 of 1997, let's see if we can scroll down over there. Because it's not going to give you the exact date, we're going to stop at Monday, September 29th, 1997. So we had 3,965.1 on that date. Now follow me here because I'm going to show you guys something pretty interesting. Let's go to October 2nd of 2006. Almost there. Again, this isn't perfect because you can't go to every single exact date. You can only go to whatever they have here available. So on October 2nd, 2006, roughly around, basically at the beginning of Q4, but let's just say we're pretty close to the end of Q3 here of 2006. We added about 3,000 more on top of our Q3 1997 number. Remember, Q3 1997, we had 3,965.1. Here we have 6,947.8. Now, watch this. So on February 10th, 2020, let's find that here. On February 10th, 2020, we were at 15,432.6. And by July 13th of 2020, let's get there, we were at 18,399.9. We added nearly 3,000 within 5 months. Now remember, we had a 3,000 from 97 Q3 to a little bit over Q3 in 2006. We had a 3,000. We did this within 5 months. Now that's, just incredibly insane. Now, to really drive this point home further, I used the monetarist theory and calculated nominal GDP using these numbers in the spreadsheet here. Now, check this out. Now, nominal GDP equals M times V, essentially, M2 times velocity. That's what you'll get for nominal GDP for a particular country that you're analyzing. So obviously, this is for the United States. So for Q3 1997, the nominal GDP equaled 8,715.28. We got that by multiplying the M2 of that particular period and the velocity of that particular period. Now, almost 10 years later, Q3 2006, nominal GDP, we were at 13,923.39. And that was nearly that was basically 159% increase in 9 years. Okay? Increased by 159% in 9 years. All right. Now let's take a look at this year, February 10th of 2020, nominal GDP was roughly at 21,605.64. And on July 13th, it rose to 25,281.46. That was a 117% increase in 5 months, guys. Mind you, 159% increase in 9 years is what we saw between 97 and 2006. In 5 months, we saw a 117% increase. Now, to really drive this point home further, what was the main catalyst behind this? Now take a look here. The M2 grew significantly. But one of the main, most sensitive data points here is the velocity. Now take a look here. On July 13th, nominal GDP with Q3 1997 velocity. Now remember, this is the highest point of velocity that we have on record. So we're going to take that highest point of velocity that we've ever had, and we're going to multiply it by our current M2 money supply. And what we get is 40,442.98. So that would be a 159.9% increase from the actual nominal GDP if we had just a 0.824 increase in velocity. Now, that is insane because 2.198 minus 1.374 is 0.824. That's all you need to get a 159.9% increase between our actual nominal GDP and this hypothetical one that we just created. Now, guys, as you can see here, velocity can greatly impact nominal GDP and, by extension, inflation if you solve for the GDP deflator. It's extremely sensitive, and only a difference of 0.8, as you guys saw, can greatly impact our economy. It's a huge factor, and its uptick will be the linchpin, in my opinion, in hitting hyperinflation within the economy. Now, what causes velocity? Now, you have some people who will say that it's a psychological factor. People will start to turn over currency more and more and more as they start to shop more and more within the economy. So there's a little bit of a psychological factor there. What we have now is that a lot of consumers are overburdened with debt, and many of them, we've kind of started to have less money available to pay for things as prices have greatly increased. Now, again, that's what I'm seeing, but let me know what you guys think in the comment section below. Do you guys think velocity will be the linchpin for hyperinflation? Let me know. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion.